All right. The champ is here.
Let's go.
I'm really into boxing right now, bro. I'm excited. Canelo's back September 30th. I'm going to go watch that fight.
Oh, you're going to go watch it?
I'm going to try to get tickets to go watch it in Vegas. There's a big fight happening on July 30th. Spence Crawford. Can't wait to watch that on TV or some pirata knockoff stolen cable.
If the FCC or FD or whoever the hell
they're not watching
is listening.
I know our subscribers are not following. By the way, friends, today we're going to cover a whole bunch of topics. We're going to talk about at what age can you still ground your kid?
Yeah.
Is there a limit?
I don't think so while there's leverage. We'll talk about
I both grounded and kicked out one of my kids. She's 20. I said she, so we already know.
Yep.
I lost my wedding ring.
Oof.
Lost my wedding ring.
Sometimes a deadly sin, brother.
Yeah, well, I don't know where I lost it. So it was all innocent. But you have a story. Your wife lost your $10,000 ring from like 20 years ago.
Yeah. Oh, yeah, she did. And it didn't take her very long to lose it after we were married either.
Yeah. I have a theory behind that. We'll talk about my theory and tactics that she probably used on your ass to upgrade that ring.
Probably, yeah. Here's one tactic. Guilt. See, that's my original wedding ring right there.
How much was that worth 20 years ago?
I think this thing was probably worth $400 when I bought it.
Okay. Mine was worth $99 at the West Covina Mall.
Nice.
And I do plan to upgrade it eventually. Don't know when. We're going to talk a little bit about opportunities in real estate.
Yeah, or the lack of opportunities and the reality of of the buyer out there today. Like you said, I think in my thinking, the real question needs to be asked at this point: is buying the right move for everybody?
I'm gonna give you the sexy answer: yes, but it depends.
Yeah.
Yes, but it depends.
We'll get into that.
And last but not least, I want to talk a little bit about your clients, my clients, who you serve, who I serve, because we have a bunch of different listeners and friends that share. I got a suggestion the other day. So there's a guy named Mike. I didn't know he's a follower or he goes, hey, you know what you should talk about on your podcast? By the way, we're not going to talk about this, but tell me your opinion. He goes, why don't you make talk a little bit about how female agents use sex appeal.
Oof. Tough talk.
To sell real estate. I'm like, bro, I can't talk about that. Sex appeal, showing their bikini and sexy skirts and this or that. And I'm like, first of all, I don't know what you're talking about because I don't follow those accounts. And
lies.
And I have no idea that's actual like a thing. But yeah, that's a subject that we'll leave for another day. Maybe episode 16.
Yeah, because I'm gonna have to do some heavy thinking before I take
that. You have to do some research.
Not research. I gotta make sure that we touch on it in a way that doesn't get me killed.
Yeah. So we have followers that are trying to get us in trouble.
Yeah,
with our wives. So we will not be talking about that. Mr.
Not today.
Mike. Sorry, bro. Sorry. But let's dive into it. Number one,
let's go. Let's start it off by talking about the reality of the today's buyer, the situation that today's buyer has as they step in. You have a couple of things that I looked up, generally known in real estate circles, but not widely known among your average person out there. It used to be that half, like in 2010, half of all buyers were first-time home buyers. That was the peak, 50%. In
2010.
In 2010.
Okay.
In 2022, that dropped to an all-time low of 36%. 36% of buyers are now first-time home buyers. In 2023, I bet you that number's gone down even more because interest rates are still high.
So let's talk about that. What causes that in your opinion?
That's easy. For me, that's an easy answer. You don't have the average person out there who's interested in buying a house. They don't have the means until they're older, right? So
sure.
That's the other piece of it was the average, I'm sorry, not 36%, 26% of buyers out there are first-time home buyers. 36 is the average age of a home buyer now.
That one surprised me.
Yeah, no.
That one. How old were you when you bought your first house?
Oh, I was 29, I believe. 29.
Okay, so I kicked your ass in that department. I was 23 going on 24, maybe 24, but 23, 24 when I bought my first place. It was back during the 80-20 days. By the way, thank God that doesn't exist anymore, right?
Yeah.
The 2-year fixed loan and then 28 adjustable loan. It was during the peak of that, 2004 or 5 when I bought my home, 2004. And when everybody was getting 80-20 loans, I was able to I locked in my deal. The broker, my loan broker at that time was like, Jose, you're crazy. Why would you lock in 6% rate? 6%, 30-year fixed. And, although it wasn't conventional, to get a 30-year at that rate, I just listened to those around me, my dad, my uncles, because those were the smartest people that I knew.
Yeah.
Hey, you need a 30-year fix. Make sure it's fixed. Make sure.
Smart.
It was very smart because when the market crashed about 2004, 4 years later, I paid $300,000 for my house, 302 to be exact. 4 years later, 5 years later, that property went down as low as 230. My neighbor across the street sold as a short sale for $230,000. When everybody was having to walk away because they couldn't refinance, they couldn't get a loan, they couldn't get a new loan, they couldn't get out of it. They didn't have, excess money to, put on the principal. I was able to stay in my house because I had a 30-year fix. I mean, my mortgage payment was $2,000. I wasn't making that type of scratch, 4 or 5 years later after I bought the house, but I was able to at least survive. I rented out the place. I moved out into a 1-bedroom and lo and behold, 5 years later, I was able to sell it for a massive profit,
right?
Which kickstarted my rental mortgage. My rental career, buying rentals.
And would you say, going back to the idea of today's buyer, would you say that is a scenario that's available to today's buyer? Would you say that the road you took to get that kickstart, not to here, but to get the kickstart, would you say that road would be available to the average buyer today? A single parent, you're a single parent, right? Yes or no?
Was I a single parent?
Well, did you qualify on your own?
No. It was me and somebody. It was two
income. Income. Okay, a 2-person income is able to finance a 30-year fixed loan right now with how much of a down payment did you do?
5%.
5% down.
$15,000.
$15,000, and you stayed basically where you grew up, which I think is important, right? You stayed basically where you grew up. You were able to buy a house at around $300,000. And then some years after the Great Recession, you were able to sell at a massive profit, right?
Yes.
You made the smart move, 30-year fixed, but that's something that everybody's doing nowadays. No, very risky, very few risky loans.
The other options don't exist anymore. Right. The 228.
Do you think that your average buyer can take that road right now?
They can, but they have to be patient. I think the problem with 2023, it's the instant gratification. I don't like this podcast. I don't like this tweet. I don't like this story. I don't like how you commented. That's the problem. Right? So they see a house, maybe it's a fixer-upper, maybe you got to but you have to invest $10,000 or $15,000 to spruce it up a little bit.
Right.
Most people right now don't want that. They want the polished, ready to move in, already basically remodeled, furnished. All you have to do is hang up your clothes type of home. Well, you're going to pay a premium, especially in LA County. So I think if the consumer or our client or clients are able to open up, and it's kind of like Al Davis, what was his quote? Just win, baby, right?
All right.
How about just own, baby? Just own a piece of property. Let time be your friend and work with you, and let that time and equity flow.
I agree that if there's
by the way, I'm not a Raiders fan.
I am a Raiders fan. So, but there's a difference between, I think, what you're saying, which we've talked about in the past. We've said, if you're going to be a qualified buyer right now, you're out there shopping, open up your horizons and maybe open yourself up to other options you might not be considering because it's a competitive market and you might not get the like you said, a walk-in ready home. That's not quite what I'm talking about.
Okay.
I think what I'm talking about is, when I first bought my house, I bought my house in 2003, basically the same road that you took outside of, cashing out of it. I'm still in it. I stayed in that house. Bought our house in 2003. We got a great deal through something called the CalVet program, which is for California veterans.
Yep.
Interest rate was low, et cetera, et cetera. And so because of our timing, and that was that was total luck and timing, we were able to ride out the Great Recession. We saw our value go super high, ridiculously high, and then it came way down. And now we owe very little on it, and we have a great amount of equity in it, right? Okay, but that's not the situation for today's buyer. I don't think the average buyer today. Think about this. The average buyer today, again, 36 years old. Why 36 years old? Because
it's getting harder.
Take them that long to both mature in their income level, right? Enough raises or enough promotions or enough job shifts to get to the next higher income level.
Yeah.
And it's going to take them longer to save their dollars. Why? Because inflation, yes. But where is that inflation specifically speaking about a first-time home buyer? That inflation exists in rent. Right?
Sure.
More than the highest thing the
biggest expense.
The biggest expense on a monthly basis, the one that's going to take the most dollars out of your pocket every month is rent. And rent has become high for the relative income.
Okay. But thus the reason why a consumer can and should quickly make a decision, figure out, okay, what do I qualify for or who do I need? I mean, those are two easy, quick questions. what do I need? Or who do I need to add to my qualification to make this happen? Can you add a cosigner?
Yeah.
Can you add a second cosigner? Husband, wife, father, father-in-law, cousin, right? So again, it's going back to just controlling, owning the piece of real estate, because you're right. Rents are going to continue to go up. Even though the data shows the last 5 or 6 months, rents have slowly, progressively come down a little bit.
Yeah.
But it's a little bit. It's not, it's maybe $100, $150. That's not going to make you or break you in many cases. But not having a tax write-off, not owning real estate when the market continues to go up. Now, do I believe that the market is going to continue to go up the next 2 or 3 or 4 years? Maybe not to the extent that it has, but it will. It will rebound for another season, for another 6, 7, 8 year run down the road. Again, time is your friend if you put it into context. Put it into this context. My dad, he bought his house in Baldwin Park, 1980, the year I was born, maybe 1979. You want to know how much he paid in Baldwin Park? $52,000 for a back house. Still owns it to this day. Now, what was his rate?
I've been to that house.
Okay, yes, you have. $52,000. Now, his interest rate was 19%. Minimum wage. I asked my dad one time, how much were you making when you qualified for the house? I want to say, and I might be confusing the conversation, but I think it was $1.75 or like $2 an hour.
Yeah.
That's what it was. So if you compare $2 an hour, 52,000, 19% rate, has inflation, minimum wage now, salaries now, current day in 2023, have they kept up to the values? I would probably say no. What would you say?
I would say definitely no.
Okay, so but you do have the power of adding your spouse, your girlfriends, your wife, mother-in-law.
Did you just say multiple, like girlfriends, like multiple girlfriends?
There's a lot of Hugh Hefners out there, bro. You and me are not, because we're dads and we're married and all that boring stuff. But there is a lot of guys that have multiples, right? Okay.
And you're gonna get them all on the same loan application,
Baby, let's create an asset.
Hey, you gotta get creative in this.
Let's create a real asset, right? But I mean, being real, you can add your uncle, your rich uncle, your cousin. It's about owning the piece of land, real estate. Okay,
Right.
But most people are closed-minded in the sense of, I don't want to give up my fancy car, even though I rent. I don't want to give up my lifestyle of traveling to 2 or 3 great destination vacations a year. I don't want to stop the trip to Vegas. I don't want to stop. Like sometimes you got to see what's important and think long term. I've always been a long term analyzer, thinker, and part of that goes back to those days, right?
So I think you and I would agree that home ownership is still a worthwhile endeavor. It's still the right thing to do, because at time, like you say, time will be on your side. If you're able to buy, you will see equity growth. You might see a slow year, you might see a fast year, you might see a down year, whatever. But over time, you're going to see more up years definitely than down, and your equity growth will be there. Sure. Take into, again, me and you are examples of that. We saw, we bought before the Great Recession. The Great Recession hit, we lost value, but over time, we saw massive
rebounded.
Our asset growth, right? Value growth, wealth growth in that asset that we bought initially. You did something else, and I stayed in. But the point is, we were able to grow it over time, because time will always be on your side when it comes to
and guess what? If you don't do it, the landlord is also going to be on your side. Hey, your year's up. We have to renew your lease.
Yeah, but here's another more important, hit the nail on the head statistic for me. The average net worth of a renter.
Oh, I love this number.
The average net worth of a renter.
Hector, listen to this.
Is I'm not even going to say it's in the $10,000 mark. It's under $10,000.
It's like under $5,000.
It's something along those lines. I'll get that statistic. Yeah. But the average net worth of a homeowner is over $200,000.
I mean, that's all you need to know.
Worth. If I die today, how much will my heirs be able to cash out?
The kids.
For a homeowner, $200,000 plus. For a renter, something under $10,000. I don't know the exact.
It's under 5, and I think it's closer to like $1,500.
Yeah, something. I want to say $1,600, but
we'll look it up before we put this out.
But that is the hard reality. That statistic by itself makes home ownership, to me, a worthwhile endeavor. But you also have the idea that most of the things that you buy on credit, because you're going to buy a house on credit, right? You're going to buy a house with a loan. Most of the things that you buy on credit right now are going to be depreciating assets. The value of what you buy, whether it's a car or a PlayStation or a vacation or whatever, that's all sunk cost, gone money. If you wind up selling the thing that you bought, it's going to be worth less in most cases than what you bought it for. Right?
I agree.
A house is a very different, very real asset that you buy that appreciates. The value of it goes up. And I know that it has gotten more expensive to buy, for sure, right? Because you have inflation and you have higher interest rates. But let's take the higher interest rate, for example. What is the difference between paying 7% and 25%, which is 20%, let's say, even 20%?
On a credit card?
What most credit cards are charging right now.
Correct.
That thing that you're buying on credit is, number one, not going to help you become richer in most cases, and a house will. And when I say rich, I don't want people to think I'm talking like rich, like crazy Bill Gates rich. I'm not talking about that. I'm talking about the kind of wealth that you can pass on to the next generation that helps them get the leg up that you might not have had.
I had this discussion with two 20-year-olds yesterday. 4th of July was yesterday, and I invited my daughter's boyfriend over, right?
Yeah.
She's been grounded, so she hasn't been able to see him for a little bit. And I said, hey, is David available? You know, is he working or, you know, he just got off and, okay, cool. Invite him over if he wants. We're going to have pool day. I'm going to make some burgers. By the way, I make the best burgers. I'm ready to share
them yesterday. I don't know.
Were your burgers frozen?
Yeah, they were.
Yeah, see, mines were fresh.
Oh.
Did
you roll it by hand?
I did that with the whole papa, almost like if it was masa, like making tortillas. Ball, smashed it down. You have to put a little dimple. You know how, the little dimple in the burger
to have the heat pocket.
The sauce, I might be saying the name wrong. Worcester. Okay, that's all I seasoned the meat. Put a good amount, mixed it up. 6.5 ounces each patty. That means it's a good thick once you smash it down. Bro, I even bought me a thermometer to put.
Delicious.
Oh my God. I kept it at about 135, 140. So it's past medium, but not overcooked. Everybody said, Jose, we should open Jose's Burgers. Jose's in and out. I'm just saying. I
did some bacon wrapped hot dogs and frozen burgers. Yes, I did.
You should be ashamed of yourself.
I am, yeah. I cooked the onions, so the onions got a little bit caramelized. So that, whatever. So anyway, but
talking about kids.
Talking about kids.
I asked them, both of them.
Conversation.
Talking about a little bit about business because they're both in sales. And I said, what are you struggling with? Do you think this is a good career choice that you guys made? One sells, actually, I have no idea what the hell he sells, so I don't really pay attention, right? And my daughter's in real estate. And, she's struggling to get the ball rolling. But we went back and we kind of zeroed in on 3 things to focus on. I said, you're 20 years old. You have no kids. You really don't, no wife, no husbands, and no crazy overhead that you're responsible for.
Right.
Right now, your focus should be learning how to sell, communicate,
leverage yourself.
And skills, right? Number two is being consistent. Knowing how to be consistent where people can count on you. When you show up to a dinner table, and if I had somebody come to my dinner table today, because I want to sell my house, and they're 20 years old, the odds of me hiring them are pretty low. Because I'm going to say they don't have the experience. They haven't done this before. I might be the biggest sale ever in their career, which, okay, you can beat that by having massive skill, knowing what to say, how to say it, and having real sales skills, right? And the third thing, in my opinion, that I told them is getting better. Kind of goes back to growth, but getting better than you were yesterday, getting better than where you were last week, getting better. But how do you do that?
You gotta stay disciplined with the
discipline.
Yeah,
discipline, consistent skills, and growing. So I asked them, what books have you read? They haven't read many books in the last, let's just say the last year. Right. I gave them top 3 book recommendations. Whether they do it, whether they don't do it, I have no idea. But the beautiful thing is, it's like, time is like a report card. In December, 6 months from now, you're able to see, okay, they did the hard work, or they kind of just mailed it in, and so to be determined. But I am looking forward to see the growth.
Are we gonna circle that back and say, okay, when you have two somewhat, because if they're in sales, they have to have some level of ambition, right? You don't just jump into sales. It's actually a scary thing for an average person to jump into sales.
I agree with that.
Right?
Yeah.
So they have to have some level of ambition.
Yes.
And so my question is, let's project this out. Let's say that your daughter continues in sales and her boyfriend continues in sales, and let's just, I don't know whether you want this or not. I'm saying they stay together. They wind up making a thing out of it.
Chances are against it. I mean,
I'm not saying one way or another. But relating it back to our buyers, how soon do you think they would take before they'd be able to buy?
Oh, I love the question. Jesus.
home.
Okay. All right. So let's say they want to live in Southern California.
SoCal.
I'm gonna go
Not
ahead.
your neighborhood. I know that.
Or yours. Okay. So let's say they want to stay within a 30-minute drive of San Gabriel Valley.
Yeah.
Okay. You could get to Riverside in 30 minutes with no traffic, and same thing with San Bernardino. Okay. So average home there right now is probably 500,000. First-time buyers, in their sales, they should be able to hopefully save 10-20% down. But let's just say it's a smaller number, 5%, 3%.
25,000 plus closing costs. So let's call it 35,000.
35,000.
They need $35,000.
Okay, good. You know what? That's a heck of a goal. How much time would they need? In my humble opinion, they're 20. They're going to be 21. Later this year. I think within 2 years they should be have good money foundation, money saving foundation, and they should be skilled where they're consistently selling and feel comfortable enough to be able to afford their mortgage. So I'm gonna say 2 to 2.5 years from today. 2.5 years from today.
2 to
Not
2.5
three,
years
not
from
3.
today.
2.5.
They would beat the odds by about 14 years.
I believe it. But see, who accomplishes goals like that?
People who are focused on them.
Focused, skilled, determined, ambitious individuals. Now, was it easier in our time? Everything was easier in our time. But really, was it?
It was. Was it? You statistically, numerically, dollar to dollar for dollar, your dollar carry. This is the thing. I love your ambition. I love not just your ambition, but your how positive you are about it. Sure. Right? It is. And I can actually see your daughter and this gentleman doing it in 2.5 years because I'm in this business and I know the potential for it. Right?
Right.
If you work your ass off, you're going to see real benefits that are not available to the average person out there. If you work your ass off. I see it. But dollar for dollar, that ambition is going to have to push harder for them than it would have had to have pushed for you at that age. It just works out that way mathematically.
Okay, but see, I agree with the statement you saying, but my first job, at 23, I was making $17 an hour. Right? At 23, 24, when I bought my first
pretty damn good. That's $35,000 a year at 23.
Yeah, I was making like 50 grand with bonuses.
Even today, for a 23-year-old to make that money is
sure.
Bad.
Sure, but I had to go through trials and tribulations and fire to get that job, right? And then guess what? I got laid off.
Yeah.
Right? Which led me to this sales career. I was an employee, sales career. But when I started, like when they started, minimum wage was I think it was $4.25 my first job. So yes, there's progression and there's, learning the skills and learning how to save and learning how to manage and learning about, what's available, advantages that you could do as a buyer, consumer, that sort of thing. For sure. And then comparing apples to apples. If I rent, if I want to move out, what do I have to pay? Right. So again, you get what you work for.
Yes. But I think you get what you work for. Probably that's a maxim that's been true forever. You get what you work for.
Yeah.
Yes. It just happens that today you have to work harder to get it than when you started. And that's a damn truth. That's a truth. I don't see how you can slice that. Because
it's harder in Southern California.
And I don't have these numbers in front of me, and I guess I could look it up. But if at one point you could buy a house in Southern California for something like 3 times, 4 times your annual income.
Yeah.
For the average person, that is no longer true.
Now
you're at 8, 9 times your annual income. And I'm talking about household income.
Sure.
Right? So if that holds true, that by itself tells you, for me, this is the mistake, by the way, that boomers make with Gen X, Gen Z, everybody else. But it's also the mistake that I see people in my generation, I'm a Gen Xer, us making with the people that are following me. Oh, they're lazy. Oh, they have no this. Oh, they have no ambition, no balls, no ingenuity, bullshit. It's all crap to me, to be honest with you. I see
the chips are stacked against them, you're saying.
I'm not saying that the chips are stacked. Yes, but the chips were stacked against us too, right? You and I came from similar neighborhoods. It wasn't too great an outlook at the beginning. Let me just be honest about that.
And we're talking about the marketplace, though.
But we're talking about the marketplace. Exactly. The economy right now just does not favor as much as it did us at that age. And so they have to work harder. This is the mistake. It's not that they're less ingenuity. They have less ingenuity or don't know how to work as hard. It's that they simply have to work harder for the same things that we had, the opportunities that we had at their age.
And I believe that it's certain points is easier. Before I turned 21, I had
the math is against you on that statement. But go ahead.
But okay, so
what are the points where it's
okay? I have a client who in the middle of from the time we got him pre-qualified to the time he became a homeowner, 3 different jobs in that 90-day process, maybe 120-day process. Why? Because he's going to work and sending applications online.
Yeah.
Right?
Yeah.
We couldn't do that in our time.
Yeah.
Right? He was always leveraging his current salary to get a better salary. Right? Now it's like there's data, Indeed.com and all these websites where you're able to see, what your position or your experience can get out in the marketplace. We didn't have that. We actually had to boots on the ground, door knock. Hey, are you hiring? Hey, can I get an application and fill it out and turn it in? And so it is easier. Work from home. What the fuck does that mean? Work from home.
Yeah, an option which you and I obviously did not have.
Okay. Right. So that's something that's been coined since 2020, rightfully so, with COVID and all the stuff that happened.
By the way, I'm just going to throw this out. Work from home, since you brought it up, is a great thing for some people because some people out there have been able to take their, let's say they're from SoCal, but they have the opportunity now to work from home, and home can be anywhere, right?
Right.
So if I'm making $80,000 a year, and that $80,000 a year ain't going to buy me shit in SoCal anymore, right? Well, I'm in most places in SoCal, right? But if I move to Utah and that $80,000 gets me a nice $300,000 1-acre, two-story, 4-bedroom house with 3 bathrooms and a studio out back.
That's what happened in 2021.
Exactly. That's what people, and now guess what? Employers are trying to say,
get back to work.
Not get back to work. Come back to the office and work.
Correct. At least 3 days a week.
Yeah, something like that.
And that's the reason some of these markets in Vegas and Utah and Austin, Texas are starting to crash. They're down 25-30% in many of these areas. Why? Because they had a mass exodus of Californians or other states going there, living there, and then realizing, oh shit, I got to get back to work, right? And now they're flooding that market with property.
That's a reason. I don't know if there's even numbers behind how much of the reason that is for those markets being coming down. I think there's a bunch of other factors.
I'm sure there is.
But certainly, what I'm trying to tell you here is that's another little piece that we, like, if you look at it, not from our perspective, look at it from their perspective, the person who actually did the move to a cheaper environment, housing environment, so that they could take their California dollars and maximize them over there. What they're seeing now is, motherfucker, do you know how hard it was to buy this house, to have to uproot myself and move away from my family so I can have a better living situation? Now you're telling me I can't have it anymore? That's just like another punch in the gut. I'm just telling you, that's the reality of today's buyer.
I'm gonna go ahead.
I know because it's like your positivity. When I hear you talk, sometimes I'm like, yes, but I can, take a bullet for this guy, and
be positive.
No. It's just that you have a like your forward push is amazing and it's contagious, and I love it. I happen to live in a somewhat more pragmatic, more of a 50-50. Like, I try to see it based on data and how it's running.
And on this data, I really believe that, just using the example of work from home, and it's a plus for them. It's a plus that option even exists for them. So to me, what's easier? I think it was harder. I think it's harder. Back to my point, I think it was harder in our time because these options didn't exist. We couldn't make money online. Online wasn't invented, right? We couldn't make. I'm an influencer. We couldn't make money on YouTube.
Yeah.
Right? I'm this, I'm that. So the reality is, there's so many options.
There are, right? There's a lot more in terms of reaching out and touching somebody.
Yep.
This whole opportunity to work from home thing definitely was not available to us.
Not at my company.
Right. What else? There wasn't the thinking of, not have one stream of income, which everybody used to be their W-2 job. Now it's like, you have the ability to do multiple streams of income. Guess what happens with multiple streams of income, by the way?
You get taxed like a motherfucker.
Screw the taxes. That means you have your W-2 job, plus you have this other side gig, plus you have this other side gig.
You need financial, yeah.
That's time. Yeah. That's also a time question. I might have been okay doing 40 hours a week. You are going to have to do 60 hours a week.
Correct.
And you're going to have to do 2 side gigs to generate the same income.
Let's close it up only because I don't want to, we don't get paid overtime on this podcast.
That's right.
Not yet.
Paid anything on this.
We don't get paid anything. Let's talk about, I'm going to go ahead and skip the, at what age we could talk about that next.
Let's talk about it because you made a big thing about, I want to talk about this. You grounded your, how old is she?
Well, let's unpack it a little.
All right, go ahead.
All right. So the question is, at what age is it like forbidden to ground your adult child? Adult technically is what, 18 plus?
18 plus.
Okay, 18 plus. Or
It depends on the maturity of the person, but
well,
I would say 18 plus generally.
can you consider a 17-year-old who graduated? They're responsible. They pay their own insurance, maybe, or their own cell phone bill, maybe.
Not legally, but I would say some 17-year-olds have definitely earned the adult
I agree with
status.
that. Okay, so at what age would you say dad's house, you as a father, 2 girls, is too old to be able to ground somebody in your house that lives in your house? Is there an age limit? Like R. Kelly says, age ain't nothing but a number.
Let me say, I think grounding starts to become less and less of an effective way to discipline somebody, because I didn't say discipline. It's more like manage, motivate their behaviors, right? Which discipline is one of those things that does that. But as they get older, things like grounding makes a lot less sense, because you're talking to now somebody who's got maybe other responsibilities, right?
Sure.
But I think the key for me is leverage. And this sounds very transactional.
I know where you're going with it.
But it is leverage. While I pay for your school or your food or your phone or your car or your anything else, guess what? You are beholden to me. Just like when I borrow money on credit, you are beholden to the lender, credit card,
Getting your car repoed?
You don't make those payments, somebody's going to come after the asset.
Sure.
Right? Okay. In the sense of how that applies to a young adult, an adult is going to start to become more and more independent of you, as they should.
Yeah.
But until they reach that point of independence, you have leverage. How you choose to exercise that leverage, I think, changes as they age. But in the case of like an 18-year-old, let's say, grounding, hell yeah, still on the table for sure.
Is 20-year-old going on 21 in a couple months still on the table? Your roof, your food, your internet.
I would say if it's an acceptable practice in your house, yes.
So I tried to ground a 20-year-old recently.
I know.
Right? She came in, and let's just kind of go back a little bit. What happened was Friday, I think it was like Thursday, Friday, Saturday, Sunday, the first week back from Europe, right? I mean, I'm sure she had the kids, not just her, but, the 2 older ones had a grand old time.
While you were out.
Yeah, the parents are out, no rules.
What's up?
Yeah. By the way, cool. I don't blame them. I'd be doing the same thing as long as they don't have a party at my house or break stuff or, like sell my car for her or sell some asset in my house, right? I got no problem. Okay. What happened, though, was that week that I got back, I basically didn't see my oldest daughter. Wednesday she worked. That Thursday, I said, she goes, I'm going to go out to a movie because, we're going to go to a movie, whatever. But I'll be home early. I'll say, cool. Be home by 8:30, 9. She left like in the middle of the day. Just be home by 8:30, 9, right? Because you have to work tomorrow early, right? I'm thinking about, her work schedule, Did she get home at 9:30, 8:30, 9 o'clock?
Doesn't sound like it.
She did not. I went to sleep about 11:30 that night. Still not home. I looked at my phone. Maybe my phone's not working. No, my phone's working. Right? So I left it at that. Next day, me and Vanessa, we go out with the 2 younger ones. We take them on a trip, this, that, or the other. She goes out with her boyfriend. I want to say like a family party or something, some kind of gathering. I said, okay, cool. Be home by 8:39. You've been out the last 3 days that I've been home. Be home early by 9 o'clock. I made her repeat it. Ernesto, what time do I want you home? She repeated the time.
9 o'clock. I'll be home.
Right. Again. That evening, I think it was like 9 o'clock, still not home. Check my phone again. Maybe my phone's not working, right? Maybe it went to spam. Yeah, right. Spam text, right? No, so when she gets home, that was it, bro.
Oh.
That was it. I'm like, hey, let me see your phone. Does it work? Yeah, it works. What happened? She's trying to explain why she was there. Maybe she had a good explanation.
I would share.
That's me. By the way, the explanation was there was a lost dog. We pulled over. We did this. We did that. I said, I don't want to hear it. I'm a dog guy. I just don't want to hear it.
Yeah.
Don't care. Right? I said, hey, leave your phone there. She refused. So here's a question to you, Mr. Ernesto.
Kill the phone.
Here's a question for you. 20-year-old, your roof, your rules, refuses to give you the phone. What do you do?
I think you have a few options in that moment. You could.
Hey, my heart's boiling.
Oh yeah.
I could
Never mind. You have only two options in that moment. Force the issue.
I felt like
upgrade whatever punishment you thought was coming.
I felt like Ricky Ricardo when he's yelling at Lucy.
Yeah.
Boiling in the
Yeah.
That was me.
Me sitting back here thinking, I can think of like 10, 15 things I could do. But you in that moment, me in that moment, two things. Snatch that phone,
Which I thought about.
Upgrade the punishment, whatever punishment you had in mind, because I'm sure there was already one in your head. Upgrade that sucker to a whole other level.
Yeah. So let's just kind of fast forward. It didn't go well. Like, it was like a meeting.
I would imagine it did not go well.
Because, she's adamant, Dad, I pay my phone. And she pays her phone. My internet, my house, still my rules, right? And
she pays her phone. That makes it hers.
I don't pay her cell phone bill, no.
That's so the asset is hers, the leverage is lost. Continue.
Correct. And I agree with that.
For the phone.
Yeah. But to me, you're still 20 years old, you're still a kid, right? Our roof, our internet, our whatever. Yeah. She pays for her food and,
Was she driving in a car that you bought her when she made that mistake?
Absolutely.
That's leverage.
Absolutely. Okay, so I ended up imposing she's grounded. Hey, you can't go out. You have the right, basically. You can go to work, real estate work, any classes. She's enrolled in 2 courses right now. And after that, that's it. All right? No going out with your boyfriend, because apparently your boyfriend's phone doesn't work either. To call, hey, Dad, we're running late. See, that call is that simple.
Yeah.
Hey, we're running late.
You want to act like the dog? Do adult things.
Exactly.
Yeah.
Don't save the dog. Say, hey, Dad, there's a dog here. This is what's happening. Woo, right? And I'll be home 10, 15 minutes. That's all it would have took. Or whatever, 30 minutes late. So that didn't happen. That didn't happen the night before. And that didn't happen like the previous night. So unfortunately, Dad's house, Dad's rules. And
Grounding.
90 days, bro. I feel like it's harsh. But yeah, right. It's been maybe 2.5 weeks now. But again, I don't want to be right. I just want to be enforcing the rule that we made, sticking to it. And I did allow her boyfriend to come over this 4th of July weekend, and he was in the pool. That's like a discussion we had.
I think kids 20, whether they be 20, maybe you find out down the road. I'm sure that they all find out down the road if they become parents themselves. I think kids think we do it sometimes just to be a pain in the ass or to, rein them in or to have control. No. Any place you are is going to require rules. If 2 people interact in one space, that space will require rules. You cannot just do things just 100% the way you want to if you're going to share space with somebody, period, stop. And now elevate that to parent-child relationship. Come on.
Yeah.
Come on.
And I think I use that an example. It's like, okay, when you used to work at In-N-Out, you're needed, and your schedule says you must be at In-N-Out at 5 p.m.
Yeah.
But on the way to In-N-Out, there's a sick dog wobbling. Can you just show up like
there's crack in it?
Sorry. Can you just... And I get that. And maybe you have a good relationship with your dad or your boss at In-N-Out. You could call the boss, hey, dude, I'm like being Captain Save-A-Dog, right? I'm going to be about 20 to 35 minutes late or an hour late.
Yeah.
And if you get permission, okay, that makes sense. That's it. Sometimes you have to use that thinking cap, like Vanessa likes to say, and make that happen. So,
side question. Do you think that the dog scenario, it really happened?
No.
Absolutely not. You call BS on that?
Of course. I call BS on a lot. Like they quickly come up with a solution. Okay, this sounds believable.
Dog,
right?
Come on.
Yeah.
And with pictures of this dog, because I know you're trying to take pictures of.
Bro, I could find a broken leg dog.
Yeah, exactly.
Right now. It takes me 2 minutes on Google. But again, I'm not saying I'm right. I'm just saying I don't care.
And it's not even about being right.
Right.
It's not about being right. It's about them understanding while you are
in this house,
or taking $1 from me,
yes,
you will follow some rules.
Yes. So I have no doubt that my 20-year-old, going to be 21 in about a month and a half, I have no doubt that she's eager to make a move and want to move out and that sort of thing. I just tell her the reality. Life is tough.
Yeah.
Life is really hard, and the expenses that you talked about, 8x your income or whatever, it's tough. And I said, listen, I'm not kicking you out. I'm not, charging you for this or for that. I'm just saying, take your time. All I need, and Mom, is communication. If I'm going to sleep, I need to know where you are.
Yeah.
Right? And so, anyways, there's more to this story, but I'm going to finish it there.
Story, man.
Yeah. With that said, Dad's House, episode 15. Give us a like, give us a share, comment. Look forward to seeing you on the next one.
Oldest child, you only have, 75 days left? Don't mess it up. Don't mess it up.
90-day grounding. Exactly. That's it.